Greetings and welcome to the Capri Holdings Limited third quarter 2021 earnings conference call. At this time, all participants are in a listen-only mode. A question and answer session will follow the formal presentation. If anyone should require operator assistance during the conference, please press star zero on your telephone keypad. As a reminder, this conference is being recorded. It is now my pleasure to introduce Jennifer Davis, Vice President of Investor Relations. Thank you. You may begin.
Good morning, everyone, and thank you for joining us on Capri Holdings Limited's third quarter fiscal 2021 conference call. With me this morning are Chairman and Chief Executive Officer John Idol and Chief Financial and Chief Operating Officer Tom Edwards. Before we begin, let me remind you that certain statements made on today's call may constitute forward-looking statements which are subject to risks and uncertainties that could cause actual results to differ from those we expect. Those risks and uncertainties are described in today's press release and in the company's SEC filings, which are available on the company's website. Investors should not assume that the statements made during this call will remain operative at a later time, and the company undertakes no obligation to update any information discussed on the call. In addition, certain financial information discussed today will be presented on a non-GAAP basis. These non-GAAP measures exclude certain costs associated with COVID-19 related charges, long-lived asset impairments, ERP implementation costs, Capri transformation costs, and inventory step-up adjustment, restructuring, and other charges. Unless otherwise noted, all financial information on today's call will be presented on a non-GAAP basis. To view the corresponding GAAP measures and related reconciliation, please view the earnings release posted to our website earlier today at capriholdings.com. Before we begin, I would like to note that we have accompanying slides posted on our website. Now, I would like to turn the call over to Mr. John Idol, Chairman and Chief Executive Officer.
Thank you, Jennifer, and good morning, everyone. Before reviewing our third quarter results, I would like to once again take a moment to acknowledge the ongoing COVID-19 pandemic and its profound impact on the entire world. My thoughts go out to all those affected by the virus and to everyone on the front lines who are tirelessly helping combat this pandemic. I want to thank our 15,000 employees around the world for the hard work and dedication they demonstrate every day to support each other and their communities during this challenging time. It's been inspiring to see the entire organization rally together. I am incredibly proud of the entire team and what Capri Holdings has been able to accomplish during these unprecedented times. Looking back over the last 3 quarters since the onset of the COVID-19 pandemic, we are encouraged by the performance of all 3 of our luxury houses. Revenue and earnings results have significantly exceeded our original expectations. Retail sales improved sequentially every quarter, while e-commerce sustained strong growth across all brands. Gross margin expanded nearly 400 basis points year to date through the third quarter. Additionally, we attracted new consumers to each of our luxury houses, as evidenced by the double-digit increases in our customer databases over the last 3 quarters. We achieved all this by executing against our strategic initiatives while also carefully managing expenses and liquidity. Our performance during this difficult period illustrates the strength of our brands as well as the resilience and agility of our business. We now believe that the near term will be more challenging. The resurgence of the virus has led to additional restrictions and store closures that impacted the third quarter and are expanding in some countries in the fourth quarter. However, we are encouraged that the vaccine rollouts provide some visibility to the end of this crisis. Looking forward, we remain optimistic about the outlook for the fashion luxury industry and our company. While there are still unknowns in front of us, we believe the luxury market will continue to resume a steady growth trajectory. and we are well positioned to participate in that recovery. As you know, a few years ago, we made the strategic decision to diversify the company and expand more significantly into the luxury space. With Versace and Jimmy Choo, we acquired two very powerful brands that have changed the future growth trajectory of the company. Over the next few years, these two luxury houses will account for approximately 40% of Capri Holdings' revenue and approximately 1/3 of total company earnings. Now I would like to turn to our third quarter results. Revenue improved sequentially, declining 17%, and was above our expectations. This reflected better than anticipated results in the Americas and Asia regions, partially offset by a more challenged environment in the EMEA region due to additional restrictions and store closures. Given our strategic initiatives to increase full price sell-throughs and selectively raise prices, gross margins and earnings were significantly above our expectations. Gross margin expanded 520 basis points, contributing to earnings per share of $1.65. Looking more closely at group revenue trends, total sales for our retail channel improved sequentially, declining 10%, compared to a 17% decline in the second quarter. The better results were driven by robust e-commerce sales, which increased 65%, and once again accelerated relative to the prior quarter. Store performance also improved quarter over quarter, driven by local clienteling initiatives. By geography, Asia remains the fastest recovering region, with retail sales turning positive in the quarter. Notably, revenue in the region increased across all three of our luxury houses, driven primarily by stronger growth in mainland China. Additionally, in the Americas, retail revenue improved sequentially, with sales down low double digits. On the other hand, in the EMEA region, revenue trends decelerated given the store closures and increased restrictions in the region. By the end of the quarter, approximately 40% of stores in the EMEA region were closed. Now turning to third quarter performance by brand. Starting with Versace. We were pleased with revenue results, which were ahead of our expectations, demonstrating the strength of the brand and the success of our strategic growth initiatives. Sales in our retail channel increased in the low double digits globally. Positive double-digit trends in the Americas and Asia regions more than offset declines in the EMEA region. Similar to last quarter, e-commerce sales increased triple digits year over year. We saw strength across categories as the brand emphasized the ultimate Versace look by pairing the latest runway styles with luxurious handbags, footwear, and statement jewelry. Accessories performed well with strong consumer response to our Virtuous collection, including new styles that are quilted in a V pattern and embellished with our Barocco V signature logo. We are pleased with the traction we have gained with the Barocco V across all classifications, including accessories, footwear, belts, and jewelry. Following the success of the Barocco V, Donatella has developed a unique signature pattern that will debut during our upcoming Milan fashion show. When the new signature pattern launches at retail in the fall, it will be accompanied by a major marketing campaign to attract and engage new consumers. We believe this will significantly change the trajectory of Versace's revenues as it expands the brand's portfolio of recognizable, iconic products. Turning to our store fleet. In the third quarter, we were pleased to open 13 spectacular new locations in premier luxury shopping destinations, including Rue Saint-Honoré in Paris, New Bond Street in London, and the Bahnhofstrasse in Zurich. All of these boutiques capture Versace's powerful vision of the future while staying true to the brand's instantly recognizable design aesthetic. We believe that physical retail will remain important for luxury fashion houses, given consumers' emotional connections with the brands. Therefore, we will continue to selectively open stores in the most important shopping destinations in the world. Additionally, we are elevating Versace's existing global retail network into our new store concept. The new format more prominently showcases accessories with enhanced positioning and increased space, which should drive significant increases in overall store productivity. To date, approximately 40% of Versace's store base is in the new concept, and we expect to have the majority of the fleet in the new format over the next 2 years. In terms of brand awareness and consumer engagement, Versace embraced innovative ways to connect with new and younger customers. Donatella made her digital debut as an avatar in December at Complexland, an immersive internet experience featuring fashion, art, musical performances, and cultural conversations. There, Versace also had a digital storefront and introduced a limited edition Trigreca sneaker. The 5-day digital event generated approximately 6 million impressions. In China, Versace partnered with GQ to produce a CGI animated short film that encompassed a surreal space of Trigreca and described the creative concept and background story of the sneaker in ancient Greek visual style. The film featured celebrity key opinion leader Danny Lee and generated over 10 million impressions. These initiatives helped to drive an 18% year-over-year increase in Versace's global database. Overall, Versace's results speak to the strength of the brand and reinforce our confidence in the luxury house's long-term growth potential. Versace represents the largest growth opportunity for Capri Holdings, as we continue to believe revenue will increase to $2 billion over time. We anticipate Versace will generate positive operating margins in fiscal 2022 and mid-teens operating margins by fiscal 2023. Moving to Jimmy Choo, revenues significantly decelerated relative to second quarter, given the absence of a holiday collection this year. During the onset of the pandemic, in an effort to rigorously manage inventory, we canceled Jimmy Choo's holiday delivery. As a result, we did not offer newness to customers in the third quarter, which meaningfully impacted sales. Despite the absence of a holiday collection, retail sales in mainland China again increased double digits, while trends also improved in Japan, resulting in double-digit sales growth in the Asia region overall. We were also pleased to see continued growth in e-commerce. We were encouraged with the performance of our expanded accessories assortment, with